track record and experience, I think, build the most trust and credibility. So we've got, a great amount of track record and experience, and we're nowhere near where we want to be, but we know what we're doing. We know how to operate. We know how to find these deals. We know how to structure these deals. We know how to manage all the teams to make the deal successful. And so that, as well as the opportunity, because if you have that, but you don't have a good opportunity, then no one's going to invest with you. But then it's also having a good deal that also, pushes people into being excited about investing in the deal. Hello, and welcome to another episode of the Real Entrepreneur Podcast. My name's Alex Coffman. Thank you guys again for joining, tuning in, supporting this. We hope to add a lot of value to you. And the whole purpose of this is just to shed any insights of, what's going on, how we're viewing the market, what we're doing in our businesses, and hopefully share some things that can help you and your business.
All right, so today I have some questions regarding capital raising and just some of the journey and insights that you guys have had over the past 2 deals, as this is something new. So whether it's for someone new that's interested in raising capital, can you provide some insights on why that's important or how you can leverage that to buy good deals?
So, Matt and I have bought most of the properties that we own either A, by ourselves, or B, with not investors, but partners. So, bringing people in on deals to help us get deals done, right? We don't have, never have had unlimited capital. So we always had to be scrappy in the way that we got deals done. If we had enough capital to do it ourselves, then we would just buy it ourselves. If we didn't have enough capital, then we would bring in another partner to buy deals with us. And so we did that for 3-4 years. And what ended up happening was just, it got really chaotic with all these different partners, all these different LLCs, all these different things going on for one house, a duplex, a fourplex, etc. And it just wasn't really scalable, and we didn't always have a solution. We were always looking for that solution in the moment when we had a deal we wanted to buy, but we didn't have the capital. So we did that for a while, and then, just look at anybody who's buying real estate at a really large level. They're not doing it with their own capital. They are raising capital from investors and getting loans from banks. So I always knew that. Matt always knew that. But I really made a push for us to start a fund. And so we started our first fund with no real knowledge of what it was like raising capital. We never had. But I knew that if we could just get, everybody into the fund and just buy real estate through this one entity, it would be a lot more scalable and easier on the operations side of things. So, that's why we did it, is to grow and scale and to do it with more people, and there's a lot of people out there who want to invest in real estate, but they don't have the time. They don't want to put the energy into actually finding the deals. And so they're happy being passive investors on these deals where they're getting really great returns. And we're handling all the management and operations of finding, taking down, buying, managing, selling all of these deals. So there's a lot of people out there. There's a big demand for it. And we want to, own $100 billion worth of real estate. We want to have $1 trillion real estate company. I want to own the best real estate assets in the world. And we're not going to do that with our own capital. So that's why it's good and necessary, is if you want to grow and scale, then you're going to need to do it with more people, and you're going to need investors.
What are some lessons that you learned from the first fund versus the second and third one that you guys raised capital for?
Specifically to the raising capital aspect?
The entire.
Not a whole lot necessarily. The first fund, we didn't have the best infrastructure and system in place to bring in investors. We didn't really know what we were doing. We didn't really have it set up for scale. But the biggest thing is, it's 2 things, really, in my opinion. It's deals, really good deals, not average deals, not okay deals, but really great deals and opportunities. And then also you need to have a good funnel and system to bring in more investors. And so at the time when we launched the first fund, we did not have that funnel and system into bringing in investors. We weren't even doing webinars and stuff at that point. This was like 2021, I believe. So we were solely reliant upon our sphere and people that we knew. And that worked out well. But then, that sphere and the people that get tapped out, right? So it's not growing. So that's what I learned from the first fund, is that you need the funnel on the back end to bring in more investors. So that's all the stuff that we do now, offering resources, putting on the courses, the free webinars, the free workshops, the events. All that stuff is to meet more people and bring in more people that we can do deals with.
Can you share some insights on how you've been able to build trust and credibility with those investors and why that's important in the capital raising process?
Yeah, I mean, track record and experience, I think, build the most trust and credibility. So, I think that's really important to build that with investors. But, also just being good people. And Rob and I, or Matt, Jason and I, I don't know, we're not fake. We're not putting on a show. We're just real, genuine people. And so I think that is picked up as well when speaking to investors and the game plan. But biggest thing is track record and experience. And we've got, a great amount of track record and experience, and we're nowhere near where we want to be, but we know what we're doing. We know how to operate. We know how to find these deals. We know how to structure these deals. We know how to manage all the teams to make the deal successful. And so that, as well as the opportunity, because if you have that but you don't have a good opportunity, then no one's going to invest with you. So it's that trust with our investors and our experience and our relationships, but then it's also having a good deal that also, pushes people into being excited about investing in the deal.
Can you break down like the structure for those that don't know, like how a fund is typically set up with like GP and LP, what those rules are, and how that typically works out when you are like the passive investor versus like, someone in y'all's shoes?
Yeah. So LP stands for limited partner. GP stands for general partner, with the 506B, 506C. In these syndication setups or the fund setups, the general partners are the ones who are making all the decisions. They're the ones who are managing the assets. They're the ones who are finding the deals. They're the ones who are raising the capital. They're the ones who are dealing with all the problems or anything that arises. They're the ones who are doing all the bookkeeping, the accounting, paying out investors, etc. All the operations of operating a deal and finding a deal, taking down the deal, selling the deal, is the general partners. And then the LPs, the limited partners, are the passive investors. So all they do is they simply invest capital into the deal, and then the GPs run everything, and the LPs get paid their investments. On all of our deals, we are GPs and LPs. So we invest as an LP alongside our investors and invest with everybody, the minimum investment. And so, we're LPs as well on our own deals. But the way that it's split depends. Like the Pace, Florida TR3 Centre shopping center, strip center, I believe that one's a 70-30 split, no pref, 70% to the LPs, 30% to the GPs. TR3 RV Resort is 60-40, 60 to the LPs, 40 to the GPs. And then there are other fees and such as asset management fees, acquisition fees, and things like that. But that's essentially how it's split. And the LPs, limited partners, they simply just passively invest in the deals and get paid their returns. And it is a true passive investment. They don't have to lift a finger. They don't have to do anything other than sit back and collect their return.
So what's the advantage of being a LP while you are the GP in every deal that you raise capital for?
I mean, no advantage really. we're doing it because we want to invest in the deals. So we want to invest capital into the deals. And also it's just to show, solidarity with our investors that, hey, we're putting up our capital as well, right alongside you. So, I mean, that's the reason that we do it, is because we want to own LP shares. And it is also to say, look, we're not asking you to do something that we wouldn't do. We're doing it with you.
So as a LP, if someone has like concerns or recommendations or things that they would want to see happen at the property, let's say it's 6 months in and whatever, how do you go about that? Like, how do you take that into consideration?
Yeah, we take it into consideration. You got to understand that RV Resort, for example, I think there's 38 investors alongside us. So collectively, that's 41 people, 41 different opinions, 41 different ideas, 41 different things, right? So, we listen to our investors, and honestly, no one really mentions anything. If we ever are in our investor call, or we would ask the investors, hey, what do y'all think about this? Just to get insight and opinions and feedback and such. But it's not like every day someone's saying, hey, have y'all thought about this? Really, it's best to let the people run point who are running point, let the person who's in charge be in charge. And so, like, if I was an LP on a different deal, I wouldn't have invested if I didn't trust the operator to do what they were supposed to do. So if I did invest, that would mean that I trust the operator and the GPs to run this asset and to manage it and do what's best for the asset. And I would not contact them and say, this or that, or do this or that, unless they asked me for my opinion. But I would let those people, run point and do what I trusted them to do from the very beginning. But there is times where we would reach out to investors and ask, like, hey, what do y'all think about this? Or we're thinking about doing this. Do you think that this would be good? And we, collect feedback and take that into consideration with decision making.
So whenever you guys are like in the deal finding process, like right now you are searching for like the next deal, is it always in mind of finding a larger deal that you can raise capital for, or what's that thought process look like? And if you do find the correct property that you're looking to take down with investors and raise capital for, how do you compel that into a pitch that will make others excited?
Long question. So yeah, the only deals we're looking for and at are deals that we're going to buy with our Tier 3 capital investors. There's no deals out there that we'll be doing that won't be for Tier 3 capital investors. But how do you formulate? I mean, we look at thousands of deals. So, right now we're looking at a Class A, I think it's 140 plus units, downtown Tulsa, Oklahoma. It's nice though. I know it's Tulsa, Oklahoma, but Tulsa is a good city, and this is a really nice Class A apartment complex, mixed use. So we got an offer out on that. I was working with Rob on that prior to stepping in here to record this, but we're only looking for deals that are home runs, and we're searching for deals that are home runs to be able to bring to Tier 3 capital investors. But when you find the home run and you structure the home run, you don't really have to do much to sell the deal because the deal sells itself. So like Tier 3 RV Resort and even the Tier 3 Century Pace Florida, I mean, we presented the information, bullet point format, and created, the pitch deck and everything that we need to properly disclose everything. But there's not much finesse or anything that goes into formulating that pitch, because the deal's great. Here's the numbers. Here's what it's going to do. And the deal sells itself.
So with the past, at least like the two most recent funds, not including Tier E Growth Fund, but the last two funds, it wasn't until you guys were under contract or past option period, or I forget exactly, that you actually went to go view the property. So is that typically the case when you are buying larger assets, or do you ever like go view the property before you
of course. The thing is, like I said, we're looking at thousands of deals and making a ton of offers, so we can't go view every one, right? And it's a waste of time to go view every one. You go view the ones that have motivation and there's an actual chance that you're going to get the deal done and you like the deal. So we go view them all the time. I mean, Matt's sending you videos all the time. We're going to tour these properties all the time. We go and view the properties all the time, but we don't go view every single property that hits our inbox. We go view the ones that we're serious about and want to buy. But I mean, the Dallas one, I can see very easily on the RV resort. I can see videos that people have sent me. I can see that it's nice. But I didn't want to drive 3 hours to go view it until I knew that the seller was going to sign the contract. So once I knew that the seller, because he played a lot of games and we were, months of negotiations and back and forth. I'm not doing it anymore. I'm doing it these terms, those terms. And so once I knew that we had an actual seller and an actual deal, then we got out there the next day. And then Pace, Florida, it's in Florida. So again, with that one, I locked it up without even initially planning on buying it and raising capital for it. I locked it up just to see if there was something there. And then once we had control of it, it's ours. So then we scheduled the due diligence walkthrough and all that stuff once we knew the exit strategy moving forward. Initially it wasn't really to buy it and raise capital for it. Well, it's just, we could have bought it, we could have wholesaled it, could have done a lot of different things with it. And so until I knew my exit strategy on Pace, Florida is that's when we, scheduled the due diligence walkthrough with Jason and went and followed everything we needed to do. We had so much time, like I had 100 days of due diligence. So it wasn't necessary to go day one.
So when you say you have control of it, what does that mean?
It means it's mine. It's ours. We have it under contract. Nobody can, the seller can't back out. I mean, if they try, then, there's legal ramifications for that. But we control the deal. It's ours. We have it under contract, and I control the deal.
So for those that might be looking for, like we talked earlier about the GP LP, and there are different GPs within the different funds. Are you looking for other GPs to onboard, or with the current GPs, those are kind of like the set GPs? Like if someone were to bring one of the larger deals to you guys and wanted to be a general partner, how would that look? Or is that something you're open to at this point?
Yeah, I mean, we're always open to it. Not necessarily, but we're always open to it. So, I mean, it depends. It's hard to answer that because you're not giving me an exact scenario to provide an answer on that. But yeah, we're always open to it.
Well, I just asked because we're
not looking to just onboard GPs to onboard GPs. But if there is a scenario where it made sense, then absolutely.
So what are the legal things that are taken into account when raising capital?
Well, I mean, you're technically selling a security, so you're going through all the SEC stuff. I would say that you need to do it the right way. And there's a lot of SEC attorneys that draft all these docs, and I would suggest you do it the right way and consult one of them and make sure that your paperwork is good. The difference between a fund and a syndication, I mean, we call like Tier 3 Capital Fund 2 for the RV resort. We call it a fund, but it's really just a single asset fund. So raise capital, buy this one asset, close the fund out. So it's, you could say that it's technically a syndication, but after we close it, we're going to open up Fund 3 and start raising capital into Fund 3 where we haven't necessarily identified an asset yet while we're looking for these assets. And in Fund 3, it'll state the types of assets that we're looking to buy and what our game plan is with those assets. And then once we identify the asset, we'll go purchase the asset. With Fund 3, close it out, start Fund 4. So don't get lost in the semantics of fund, syndication, etc.
So for those that are interested in being a passive investor on future deals with TR3 Capital, is there a certain amount that they have to put in? A lot of people do ask that people be accredited.
Yeah, accredited, non-accredited. I would say just come attend some of our calls and things that we're putting on. Let's build a relationship and figure out what's best for you with what you're looking to do. So reach out to us. Go to tier3capital.com. We put on, weekly events, and we have all these things that we have going on. So come participate with us. Come reach out to us. Let's talk to each other and figure out what's best for you. But also we don't have it doesn't look the same for every single one. So it depends on what the fund is, what the asset is, what we're buying. But first step is to build a relationship with us. We want to build a relationship with you. So reach out and let's talk to each other.
What is like one dream asset that you've always wanted to buy?
Can you expand? Like what type, or one specific building, or?
However that looks like, for me, it would be a parcel of property that has different assets on it that, provide different things, like an event space or an office building or something that kind of correlates all together. Is there anything like that you've always dreamed of owning, or now that you've had, this diverse portfolio that you now want to go buy?
No, not necessarily. Not really. Just I want to keep buying bigger and better deals. So eventually I think it would be great to own, something like the tallest or biggest building in America, right? Like things like that. I want to go buy bigger and better deals and continue to buy better assets. So eventually I want to own the best real estate in the world. All right. Thank you, Kat, for all those questions. All right. So that's the end of the episode about raising capital. We're really excited. We love all the new investors that we're investing with. We love that we're able to bring these opportunities to you. So if you are interested in doing these things with us, reach out. Like I just mentioned, we want to build a relationship with you. Go to tr3capital.com. For everybody who attended the boot camp this week, congratulations. Hopefully you're going out there now, moving forward, and finding some deals that are going to make you $1 million. For anybody who missed out on the boot camp, don't worry. We're running these every single month. So the next one that you can attend will be starting on June 4th, I believe. First week of June. Reach out to the team. We're here to help you, and we'll see you next week.